What's going on, guys? Welcome back to the channel. Today, I want to go ahead and talk to you about some of the experiences I've had lately trading futures, both on Top Step with a prop account and then also with my own capital. We're going to talk about the 2 days of trading, both yesterday and today, that has allowed me to make over $20,000 of my own money on my futures account and pretty much doubling the account in 2 days. But let's go ahead and start with my experience trading Top Step and share with you guys some of the pros and cons that I see. So the first pro that is very clear is that all I had to do was spend like $200 to $300 to get the account. I had to get funded and pass the evaluation, which I was able to do relatively quickly. And then you go ahead and move to your sort of express account, whatever that might be. And once I was able to get it funded and starting to trade on it, I was able to get it up to a relatively large profit of around $7,000. So I was doing very nice to start. But then over the next following days, I did give back some profits. Now, one of the rules that I think is a very big con for that Top Step account that I traded was that once you pass a zero balance, so let's say your first day starts at zero, once you pass that zero balance and go up X amount, let's say $7,000, which I was up, you cannot allow the account to go back under zero. So you can give back all of the $7,000 that I was able to make, but if it hits zero, the account is closed. And so the con that I really hit here and the wall that I hit, just my own personal experience, the wall that I hit was that I gave back profits. And as of right now, my Top Step account balance is $1,000. And so I started at zero, I went up to $7,000, and it went back to $1,000. This means that I cannot lose more than $1,000 without this account getting closed. And so this has extremely limited me to the size and the risk that I can now take. Because if I lose $1,000, whether it be in a drawdown or just on a few trades, that account is shut down. So I really can no longer take any type of size that I want to take. And I'm probably just limited at this point to trading one MNQ or one MES contract. And I just not going to deal with that. I might as well just not even trade in it. So at this point, I'm going to keep the Top Step account open. Probably not going to do much in it because I've put myself in this situation which I can't really get out of it. I would have to be taking like $30, $40, $50 scalps over like months of time to just build back a barrier or a buffer to then trade in that. And to me, that is a waste of time and pretty much just a opportunity cost situation that I am not willing to do. So that was my experience. There are definitely some pros that I think we can all agree upon. It's a low barrier to entry, not much monetary cost out of your own pocket. If you follow the rules, you get paid out. In theory, it's a pretty nice product and a pretty nice thing to do, and I really don't hate it for new traders. Now, there are definitely rules inside once you get started that are maybe tough to follow or definitely limit your upside. That is definitely something that is very apparent, and that is sort of what I don't want to be doing. I have no interest in limiting my upside. I know I'm a successful trader. I've done it for 12 years, trading options, and I want to have the freedoms that I do with my own capital. And so with your own capital, you unleash unlimited freedoms. Now, you also unleash unlimited risk because you can just blow up your entire trading account. Whereas if I blow up the $20,000 that I put in on Sunday, then unfortunately, I'm down $20,000. If I blow up a Top Step account, I'm down a few $100s. So if you're someone that thinks you're going to blow up an account, then it's probably right to trade props if you're not confident yet. If you're a trader that knows what they're doing, I think limiting your upside is not the right thing to do, and that's why I would recommend trading your own personal capital. That's my experience in a nutshell over the last few weeks to a month that I've experimented trading futures, both on prop and on my personal account. And so I'm going to continue from this point forward to just trade my own personal Trade of 8 account. I funded that with $20,000 this week, and the account is now at $42,000. I have doubled the account balance in 2 trading days. And so in today's video, I want to go ahead and break down the major trades that I took on the ES and NQ that made me over $20,000 over the last 2 trading days, trading futures, and share with you the strategy and the entries that I went ahead and took. And you're probably not going to be too surprised to know that yes, I traded the break and retest. the same thing I always trade. And hopefully this video today can prove to you that the break and retest or a price action strategy can be used on any financial instrument, whether it is options, common shares, or futures. I traded the exact same way that I always do and have always talked about on this channel and successfully did it with futures. So let's go ahead and break down those trades today. Press that like button, subscribe, and let's jump into the charts. Real quick, before we go any further in today's video, I want to let you guys know about a 3-day live event that I will be doing here on YouTube, and all you have to do is go to the link down in the description to register. On Sunday the 16th, we will be doing a live stream preparing for the upcoming markets and upcoming week. On the 17th and 18th, we will be live trading together for a full trading day on YouTube for 100% free. And during that time, we will be also giving away some awesome giveaways and also announcing our Black Friday discount for the trading community. So if you're interested in learning more about how I trade and potentially joining our insiders trading community, the place to be is there on the live stream on November 16th. Make sure to go down in the description below and register for the event. With that said, let's continue our video today. So here is TradeZella, and you can see over the last 2 trading days, I am up $22,000 with a trade expectancy of $715, a profit factor of 14, and a trade win percent of 77%. So to say that I'm on a hot start would be an understatement. This is a crazy start, and of course, it's not going to stay this way. It's just not natural to stay this way. Maybe it will, but I doubt it. These are the beginning stats of my personal account on Tradeovate, which I do use TradingView. I connected my Tradeovate account to TradingView, which is where I set up my trades. But you can see in these 2 days, there are a few major trades that I want to review. The first one is this NASDAQ short. That was a $7,000 profit on a NASDAQ short. I want to go ahead and talk about this ES short for $3,400. And the final trade that I want to go ahead and review was a trade today on the NASDAQ, a long this morning of around a $2,800 profit. So out of the $22,000, we're going to review roughly $11,000 to $12,000 worth of profits. There's a scalps here and there, but I don't have time to review every single trade. We're going to look at the big trades and the main trades and the very clear trades that you can learn from. Now, before we do that, I just want to go ahead and show you this is the Tradeovate account. I will go over to the application settings. You can see that this is a live account that has $42,000 in it. Now going up to our P&L, we can go here and I will show you guys the account balance history, which I can go to a custom range. We will go to the 30th of October, which is around the date I went ahead and funded this. I think I funded it on the 31st. I will go to the 4th, and you can see right here, there was about $450 in this trading account, which I basically just had $500 to keep it open so it doesn't close. And you can see I went ahead and funded this with $20,000, roughly, yeah, $21,000. Actually, I made $900 that day. That's why. So $20,000 was the fund, and you can see we are now at $42,000. So overall, if I go to my performance and go to this range, the same range, you can see since that day, we have made $22,000, a 67% win rate, with my losing trades of $4,000 and my winning trades of $26,000. So an incredible result to start. That account went from 20 to 40, a quick double up on the futures account. And so I just wanted to go ahead and show this to you, to share with you that it is real. It's a live account. I'm not BSing you. You can see it up here on the left side. I can go to anything you want me to. I'll go anywhere on the screen. I'll go to orders. You can see the orders. I'll go to position history. What does that show? I have no idea. My subscriptions, I have no idea. No subscriptions. Cash history. There you go. $200 in it. Then it went to $20,000. Anyways, you guys know I'm not here to BS you. So pretty good results, right? How'd he do it? That's why I'm here. Let's go ahead and talk about it. So the first thing that we have to talk about here is understanding the macro picture on the market. If you guys have paid attention to my live streams, you've paid attention to my analysis, if you've watched anything that I've talked about over the last 2 weeks, you know that I've been waiting for the market to break out of an NTZ and pull back into the gaps that were down below. This has been the main thing that I've talked about on Instagram, on X, on YouTube. I've been waiting for the day today, and it started to happen. And I knew once we broke out of the range that we've been trading in all of last week, that we should get aggressive downside through the low volume area on the SPY, on the Qs. If we go to the NASDAQ futures, you guys know that we've been looking at this volume profile analysis for quite some time. I'll go ahead and pull up the volume profile, and you can see right here that the volume profile has shown us that there is a very low volume area below under 25,850, which was the low of last Thursday, into this area down here at 25,400. And you guys know, if you pay attention to my analysis, that when you enter these low volume areas on the market, there is aggressive, volatile, and opportunistic times to trade in the market. And so we have been mentally preparing for this day. And this definitely plays a major part in the profits that I was able to make over the last 2 days. So am I able to replicate that same performance moving forward? Probably not. Why? Because trading is not linear. Trading is exponential. When you have great opportunities on the market, this is when you size up and you take your risk. Inside of this low volume area, I knew that it was time to take my risk. And that is why I was able to likely make so much money the last 2 days. So moving forward, will I be able to replicate it? We'll see. But I don't expect, nor should I expect, to replicate that performance once we start trading sideways again, right? Which is going to happen naturally. So coming into the last few days and coming into yesterday and Monday, I knew, hey, if we get this break, I'm putting risk on and I need to take advantage of this because we have been waiting for it. And there you go, right? So that was step one in being able to make the money that I've made on the futures contracts the last few days. Now, if we look at the NASDAQ futures, you guys can see right here, man, without me even saying anything, this is once again just a simple break and retest strategy. You can see very clearly that we had Thursday's lows here, we had Friday's lows here, and today all we did was break and retest that level and turn it into a rejection. It's not very difficult. It's not very hard to read, and I'm sure many of you out there took this exact same trade. You can see here on the S&P 500, we had very clear triple bottom lows inside of this area, and we simply moved up into it, saw rejections at 68.50 to 68.40, and faded that level on a break and retest rejection. So bigger picture, macro picture, how did I make all my money? Trading the break and retest after moving out of a channel. So let's go ahead and talk about some individual trades. And the biggest one that we're going to talk about is this one on the NASDAQ of over $7,000 profit. This was a pretty massive trade in terms of tick value, in terms of points, over a $7,000 profit. I was short around the 26,020 area. I will go to my executions. Right here, you can see I was short around 26,000 on the NASDAQ futures, selling my last contract at 25,763 for over a 240 point move. So a wild move on the NASDAQ futures, 240 points on the NASDAQ overnight last night. So how did I manage this? Why did I stay short overnight? Why did I enter? All of those questions, let's go ahead and answer them. Yesterday on the NASDAQ futures, we had a low of day right here at 26,015. And so in the overnight session last night, if we zoom in, we can see that around 8 o'clock p.m. yesterday, we went ahead and drove lower through that intraday low. And so I got an alert on my phone that said, hey, we made a new low. We have broken the intraday low here in the after hour session, which was also coincidentally this pre-market low right here. And so what am I going to instantly look for? I'm going to look for my trading strategy, something that I have developed and watched for the last 10 years of my life. I'm going to look for a break and retest rejection, right? Naturally, that's what I look for all the time. So why not look for it again? Well, you can see right here that the NASDAQ futures dropped below that level. It went up and popped back into that area, and we can see rejection candle, rejection candle, rejection candle, and rejection candle. And once we saw that bear flag set up right here, rejecting under the intraday low, 26,015, I went ahead and looked for a downside move on the NASDAQ. I took my NQ shorts and I looked to hold them overnight. So that was this trade right here where I was getting short around that same time frame. I went ahead and shorted a few times here, shorting, taking profit, shorting again, taking some profit into the drop. And then this last contract right here from 25,999 to 25,763 was the big one that I let run for over 140 points and a $4,700 profit on one singular NASDAQ futures contract, which was a massive, massive win. So what was the strategy behind that trade? What was the entire mindset behind it? Break and retest rejection. Not surprising, right? Same exact thing. So let's go to the next trade. Let's talk about the next trade, and that was this trade right here on the NASDAQ futures. This was a $2,800 win, and this was actually a long today. This was a long into key demand, so a retest of major demand on the NASDAQ futures. You can see that this morning I longed right here at 25,746. I longed again at 25,710, and I sold into 25,747 and sold into 25,850. So why did I decide to long the NASDAQ this morning and make around this $3,200 profit? Well, let's go to the charts. So here on the NQ, this is the 30-minute chart. You can see that we had this previous demand around 25,700, which I was watching for a potential bounce off of this morning. And also on the S&P 500, this was right into our golden zone demand, which you guys know we have been talking about for quite some time. We've been looking for the ES to pull back to these previous highs in this golden zone, and that is exactly where the ES has pulled back to today. So we also were at the daily 20 SMA on the S&P 500, and with experience as a trader, I know that if you gap down into a major demand, the 95% probability is that you're going to get trap shorts, you're going to get retail traders slamming the put button, slamming the short button at the open because you're down in the pre-market. And if that key demand level holds, you are going to create somewhat of a squeeze to the upside and a move that is fueled by trapped sellers. So this morning on the S&P 500, we can see that we opened right in our golden zone demand, which is something we have game planned for quite some time. If you come to the pre-market live streams, you would know this. You can see that this was also in a major demand zone between the pre-market low and that 25,700 level. And I was looking to long this pullback into that demand zone, and once I saw a strong reaction out of it, I went ahead and added into my position, sold into this initial pop, which was into VWAP. You can see my first initial sell into VWAP, and then my final sale was into the supply. I will go to my TradeAvit account for you guys to see this. So right here, this was the long on the TradeAvit account this morning. Longing right here, selling into this first push, and then selling into this 25,850 supply above. So why did I sell when I did? Well, I sold into that push because that was the potential rejection point on the NASDAQ futures. And all I was looking for on this trade was a trap short, morning pop, back into the lows that I can then look to fade back to the downside. So why not take advantage if I am confident in going to that level? Why not take advantage of the upside in the meantime? So that's exactly what I did. So the last trade I want to talk about today is this S&P 500 14-point scalp. This is a $675 win. So a little bit on the lighter side, but it was a very, very clean trade using key levels. And that's why I want to go ahead and share it. So 14 points, 13.5 points, $675. Of course, if I would have scaled up on this one, it'd be more, but overall, the tick value and the point value return is relatively high, 13.5 points on the ES. So why did I take this trade? If we go over to the S&P 500, actually, this trade was based off of the SPY and the S&P, but if we go to the SPY ETF, we can see that our target for fading this move today was the triple bottom lows here, here, and here. That is exactly $680. That would be a break and retest rejection of the previous day low, PDL. This is such a textbook trade in a bearish market, and that is exactly what you got. Previous day lows, push into it, break, retest, rejection, and we can see right here around midday today, we got that push right into 680. The high of day was 679.96. 4 cents off of previous day low, which is exactly where we started to fade. So why did I take my entry where I did? Well, if we go over here to the S&P 500, I was watching this Friday low at 68.43. So right here, if we go to the 15-minute chart, we can see that there was a low here at 68.43 on the S&P 500. And once the ES failed back under this low from Friday, I was looking to fade this move to the downside. So right here, I did try to short that 32. I shorted 40 and got stopped out at 43. Now, once we failed back under it, I shorted it again and was able to catch that 14-point move. So going over to my charts, right here, I started to look for that fade at 43. looked for that short here, and then ultimately got stopped out. We got back above that level, but we did fade the previous day low at 68.50, and right there we failed back under that Friday low at 43, which is where I went ahead and entered it once again, shorting that into the VWAP low and taking my profits into VWAP. A very clean scalp on, again, a break and retest rejection of previous day low. So if there's anything to take away from today's video, it is the fact that as a break and retest trader, someone that understands price action and knows their key levels, you can trade options or futures. There is no different. The vehicle that you choose to trade a directional move with does not matter. If you know the market's going to move lower, you could trade puts or short the ES. If you think it's going to go higher, you buy calls or long the ES. It does not matter. Price action is the same. The candles on the chart are the same. How you react to them and what you use to make money, that's up to you. There are pros and cons to both, which I'm not going to get into today's video because that is a very long-winded conversation, but most of you out there probably know those pros and cons, and it's up to you to decide which one you'd prefer to trade. For me, if I just give you a little sneak peek into what I plan to do in the future, if it's a SPY or QQQ trade that I want to take, I will be trading the futures. If it is an individual equity trade, such as the gap down on NVIDIA that I'm watching, or let's say a Tesla long off the daily 20, that is an options trade. So anything SPY and QQQ, I will no longer be looking to trade options on. I will use the futures contracts to take advantage of those moves. I will save my options trades for A+ individual equity setups that will yield the largest returns.